Right now, the American economy is being pulled in two completely opposite directions. On one side, we have an explosion of technological wealth, and on the other, a harsh wave of global instability. We are seeing historic market optimism in Silicon Valley. Apple is celebrating half a century of market dominance, while unreleased hardware from Google continues to capture high-value consumer attention. But that optimism collides directly with reality at the pump. The escalating conflict in the Middle East is putting intense, immediate upward pressure on domestic gas prices. To navigate the modern economy, you have to track both of these engines. Innovation and urgency are the specific forces dictating both consumer wealth and daily survival costs. Apple officially hit the 50-year mark. Executives ring the bell at Nasdaq, recognizing a journey from a garage startup to a massive multi-trillion-dollar empire. To maintain that valuation, the company's primary growth vector is now deeply integrated artificial intelligence. Advertisers know exactly where the premium eyeballs are. They are currently pouring capital into coverage of this milestone to align their brands with Apple's prestige. Meanwhile, focus on Google's hardware ecosystem is accelerating due to newly leaked CAD designs of the unreleased Pixel 11. The renders reveal specific physical modifications, most notably slimmer bezels and a highly refined chassis. While those exterior updates appear incremental, new industry leaks point to substantial performance upgrades happening under the hood. Because gadget lovers rush to dissect these leaks, the cost per mil, or CPM, for ad placements on tech content is soaring. Consumer attention remains heavily locked onto premium gadget escapism. Meta is also expanding its footprint in wearable tech, launching new Ray-Ban smart glasses designed specifically for prescription wearers. These glasses utilize augmented reality to overlay complex digital data directly onto the user's physical environment. Wearable AR has graduated from a speculative experiment into a fully commercialized premium niche that draws high-value advertising toward early adopters. Away from the tech world, the US and Israel remain entrenched in a geopolitical crisis, now entering its fifth week of sustained operations. The physical escalation is severe, marked by recent explosions that struck deep inside the Iranian capital. Adding to the regional tension, Donald Trump delivered a strict political ultimatum, warning of destruction if Iran continues to pursue its nuclear ambitions. This instability in the Middle East triggers an immediate macroeconomic chain reaction, directly choking global energy supply chains. This chart shows the national average for gas prices from 2022 to the present. The line aggressively crosses the $4 mark in response to tightening energy markets. This sudden price surge creates an unavoidable hit on the average American household. While this creates serious domestic economic strain, it also builds a highly volatile environment for specialized advertisers operating in the finance and energy sectors. We are living in two starkly different realities. Trillion-dollar optimism flows out of Silicon Valley, while the expensive consequences of the Middle East conflict dictate the cost of daily life. This precise friction, the constant intersection of cutting-edge innovation and urgent global crisis, is the defining characteristic of today's market. Monitor both sectors closely. A sudden shift in hardware production or an escalation in the Middle East will immediately impact everything from your investment portfolio to your monthly expenses.